Hello and welcome back to Sun, Sand, and Soul. I'm Josh Tomey. With me, pleasurably as always, is my co-host David Haber, our on-air producer Kyle Haggerty. And I cannot start this episode without first congratulating David on two things. Number one is his shirt, which is as lovely as it is startling. And number two is David had his first grandchild yesterday. So David, the floor is yours because this is truly a moment to celebrate.
Well, thank you so much. It's a wonderful feeling to be a grandparent. It's one of those great milestones in life, and the best part is that you get to give them back.
Absolutely.
But our little bundle of joy, he looks beautiful, and we don't have a name yet, but we're working on that, or they're working on that. And so shout out to Jonathan and Paloma Haber, and mother is doing well. The father is frazzled, and I told him that...
Sounds about par for the course.
I said if he's frazzled on day one, he better pace himself because he's got about 50 years of parenthood to get through, So it's exciting. But I do want to say that I wore this shirt today for two reasons. One, I always like to wear a bright and colorful shirt on Sun, Sand, and Soul to stand out. Because
you otherwise don't stand out enough. We would otherwise completely miss David's participation if it weren't for the shirt.
Totally. I would rather have a shirt that's loud than be loud. They say, walk.
I'm giving Kyle my look across the look across the states.
Yeah,
but I don't know if that's your chief concern, but we can get back to that.
And the other thing is, when I see my grandson, I want him to understand, he's got
who's Papa,
and the Papa's a pretty big hitter there. So
on the note of names, baby pending a name, you did say to me earlier today that Papa was going to be your working title with your grandchild.
Yeah, it's for me it's Papa. Jillian, his grandmother, wants to be Gigi or Nana, and Lisa, my wife, wants to be Lili or Mana. But as I told everybody, the kid will call us what the kid will call us, and whatever name the child decides to give us, that'll be the name we stick with.
I did send David and Lisa a congratulatory text this morning, and I suggested that Lisa's name could be Booby, which was very quickly shut down. I think that she felt like that may be aging her a little bit more than her years.
Well, I've been given Abuelo, I've been given Zaidi, which is the first one is Spanish, the second one is Hebrew. Or Jewish, and I think I'm just going to stick with Papa.
I like it. Papa David. It works.
Papa David. So.
I think we can start doing the title cards as Papa David. I kind of like that.
I'm actually going to see the child as soon as this podcast is over, because I always take care of my work first. Although this is not really work, this is more entertainment. I really enjoy our time together, and look forward to many, many more podcasts with you.
Well, on that layup of transition, and I will parenthetically say Kyle is slowly beginning to compete with you as far as shirts, but we're not going to...
I was going to really go for it, and this is my toned down version.
I already told Kyle he has to go back to neutral for next week, because
he's stepping into your territory.
Just stay out of my lane.
Honestly, if it weren't for where you were sitting, I wouldn't know who's who. So it's we're gonna figure that out. Look, getting to the podcast, this is an important show for us, because I think we're getting into a subject today, which is insurance, that is so consequential, and we see it in the news constantly. I think anybody who has lived in South Florida, Florida in general, sees a barrage of headlines, in particular over the last few years, about the cost of insurance. And today we're gonna be speaking with an insurance expert, Joe Knapp from Brown & Brown Insurance, and somebody who's had a major role in this South Florida marketplace, and I think understands some of the underlying conditions that has us be in the position that we are in South Florida, Florida in general, and give us an opportunity to ask some questions, because I think on behalf of all of our listeners and viewers, there is a lot of misunderstanding around insurance. I think the one thing that everybody does understand is how expensive it is, and how much that impacts, whether it's our condominium association fees, the cost of single-family home ownership, even the rents that we pay in the multifamily setting are all significantly impacted by insurance. and we're again being peppered by information through the media about how much more expensive it's getting, and obviously we see that being real when we get the bill. But before we get in with Joe, I do think it's important for us to set a little context. And David, I think the first thing I would want to ask you as a legal expert is, insurance is contract, right? I mean, for all intents and purposes, you're establishing a contract relationship with with these carriers that are providing these policies. What kind of role would somebody expect an attorney to play in that process, to the extent that, it's a contract, but how much input does an attorney really have on that on behalf of an association or a piece of property?
Well, that's a good question. The answer to that is, in terms of the contract itself, you cannot change the language of the contract per se, because they have standard forms. However, you can negotiate certain endorsements, or you can negotiate out certain endorsements. Typically, it's with the insurance agent and insurance broker that you discuss these endorsements, exclusions, and as everybody should know, insurance companies don't make money by writing checks. They make money by collecting your premium checks. And so they're not so quick to write checks for casualty loss. They fight over many of the casualty losses because in the event of a hurricane or, fire or windstorm, they get tremendous numbers of claims. And so they have to parse out what's a valid claim from what's a inflated claim, if you will.
Before you go further, and I think before Kyle asks the question,
Right.
What's an endorsement? Let's clarify for our viewers and listeners what an endorsement to an insurance policy is.
So there are different conditions of an insurance policy, and there are different exclusions to the insurance policy, and they're laid out in the contract as to what is excluded from coverage, what constitutes an event of loss, and then they have certain endorsements, whether it's a mold endorsement or whether it's a certain type of, whether it's
terrorism is an
terrorism
endorsement
is an endorsement. Sometimes
There's hazardous materials that I've seen in some insurance policies.
You'll see things like that. War is an endorsement. There are a lot of types of endorsements. There are endorsements that can get rid of coverage, and there are endorsements that can add coverage.
And obviously exclusions definitionally are essentially saying it specifically excludes a particular type of loss coverage. So if something were to exclude mold as opposed to an endorsement that would specifically state it as part of a claim, then you basically are uncovered on that. So when you're dealing with exclusions, it's obviously a lack of coverage in that particular area.
Right. You can get an endorsement to add coverage for mold or other pollutants. You can get an endorsement to cover certain events, but you also have certain endorsements that affect coverage and exclude.
From your perspective, I mean, do you think of, from a legal perspective, representing associations or other property owners, that endorsements are typically sort of a belts and suspenders and basically saying you've got the primary coverage, but in order to make sure that we're addressing potential gaps in liability, here are the endorsements we'd want to see, or, in some cases, obviously maybe a separate policy altogether, because obviously some things may rise to the need of an entirely separate policy.
Yeah, I think that's a great question for Joe when he gets here, as well, as to whether or not endorsements are typically adding coverage versus excluding coverage.
Right.
But I think the biggest issue that I see in South Florida is especially with respect to exclusions and endorsements with respect to hurricanes, which is one of the biggest issues we worry about, is twofold. One, did the government call it a catastrophic event or whatever they call it? Because sometimes it requires the government to identify the casualty loss as a certain type of event in order to get certain types of coverage. For example, for businesses, for loss of use, the government has to either shut down things or, I had one claim where they shut down A1A. And so they couldn't do business. It happened to be a business. And so the argument was that they had shut down A1A and therefore nobody could do business because they had closed basically, areas of the city
outside of the claimant's control. So in that case, they're basically saying we did not, initiate the stoppage in business, and therefore we're making a claim to that effect.
Right. And then the big issue that most homeowners deal with, and condominium homeowners and single family homeowners, as well as some commercial owners, is what's the difference between windstorm and flood?
Yeah, that
to me is where the rubber hits the road, because you currently only have a certain amount of federally insured windstorm insurance. I think Joe will answer this question of whether you can get extra coverage separately to supplement that. But the government on your typical home has only a certain amount of coverage. I don't remember if it's $250,000.
Oh, you're talking about flood insurance, the
Yes.
NFIP policies, right? That's
Yes.
the National Flood Insurance Program that in the case of condos is going to insure, I think the limit right now is $250,000 per condo aggregated across the entirety of the association. So if you have 10 condos at $250,000, you have $2.5 million in total loss coverage for a flood, which is different than a hurricane. And I think what a lot of people get confused around, David, and I think you're talking to that point, is, well, what if the quote unquote flood is actually caused by a hurricane? What's the difference between rising waters and storm driven waters?
So that's what I'm talking about, and it happens to affect single family homeowners as well, probably more so. And that is that, and they had this when they had that storm in Mississippi and Louisiana, where that whole town in Mississippi just underwater, flooded away and was gone. And they had federal court lawsuit about that as to whether or not it was flooding water, rising water that caused the damage, where the homes were literally knocked away, or whether it was from the windstorm. Now, the windstorm created the waves, if you will.
Right.
But it was the rising water that caused the loss, and the federal court said that goes under flood insurance because it was rising water. It's not windstorm. And they literally had a dispute between the insurance carriers for flood and the insurance carriers for wind. And the wind carriers won.
And said it was a flood.
And said it was a flood and rising waters. And they ended up winning the suit. And all of the people involved in that suit therefore had a limitation on the amount of coverage they had. So they were trying to get it as a windstorm event. But they ended up, my understanding is they ended up with it being a flood and rising waters claim. So if you live in South Florida, where the waters can rise anywhere from 5 to 15 feet or more in a windstorm event, such as happened in the recent hurricane on the southwest coast of Florida, where I think it was, I don't remember if it was Marco or somewhere down there, where you could see the water rising to the second floor.
Fort Myers and Naples and all that. Terribly.
So those are rising waters, and that's not covered by your windstorm.
Right.
And you have to prove that you'd have to prove the roof blew off, the windows blew out because of wind, as compared to it being from rising water. And I think that's a difficult thing to prove when they have a picture showing the water at 14 feet.
When they're concurrent events.
Right.
That's correct.
I have a question for both of you. So when a person needs to purchase insurance, 20% of what you're saying I get, and the rest is kind of going like this, just as a consumer. When should a person get legal advice on a policy that they need to get? What level of advice do they need to get from someone from your firm? And then for you, what knowledge should a realtor have on all of this? Because your average person is like me, who knows that they need to get it, but half the things you all are talking about, we just kind of shrug our shoulders and go, okay.
Let me start with my end, because on the real estate and property management side of things, it usually would probably predate in a lot of cases when you'd be engaging an attorney. And I'll say it in the following way. Depending on single family home or condominium purchase, for many people, certain degrees of insurance coverage are going to be required by your mortgage. And therefore, you're not going to have a choice but to place a policy. And in the case of single family homes, for many people in Florida, it's as much of a struggle as it is for condominium associations, because the cost of single family home insurance has risen exponentially as well.
Skyrocketed.
So in some cases, so in the case of, give you an example of my home, I have a mortgage on my home, and
sorry to hear it.
It's when I can start buying shirts like that, I'm gonna have a different conversation. But I've got
for sure.
I've got mandated insurance as part of mine. Many people pay as part of their mortgage escrow, and escrow will be money that the bank or the mortgage holder holds aside for the payment of things like property insurance and taxes, which are required. That's part of how the banks protect their lien holder status over these properties, is to make sure they can't be taken by the county or by a catastrophic event.
Another thing that happens is if you don't have insurance and it's not escrowed by the mortgage company, you'll get a letter from the mortgage company that says you haven't given us proof of your insurance. And if you don't give us proof within X number of days, typically it's 30 days, we're going to what's called force place insurance, meaning we're going to force insurance upon you, and we're going to tax you and send you the bill for it as part of your mortgage because you didn't prove to us that you had insurance, because the mortgage company needs to be protected.
They have to protect their asset, right? So they are the lien holder and title holder of the home until such a time as you pay it off. So in finishing my point, so that's sort of often step one for people of what's required. In condominium associations in the state of Florida are required to have certain forms of insurance by law, and so they don't have a choice about it either. And that is less by a mandate on any kind of lien holder as much as it's a mandate by the state on the statute itself. So in the case of a condominium owner, you're going to be focused more on your condominium policy individually, a policy that's mostly well known as an HO6 policy, which is going to cover the contents of your condominium and often will extend into certain damages to the condominium's common elements that might be damaged as a result. So
I don't think the HO6 covers anything other than the inside of your unit from the skin in, meaning the paint, whatever floor coverings you have, your drapes, your television.
We can talk to Joe about that, because I know there are HO6 policies that have endorsements that will cover things like drywall or things in the common element like the carpet outside your unit that are the property of the condominium, like the drywall itself is, and that your HO6 policy might otherwise be excluded on the policy.
Yeah, but they're not going to cover the major common elements of the building itself.
No, and
HO6 is what?
So HO6 is a to David's point, generally is a condominium contents policy for an individual homeowner, so that if your home, let's say there was a hurricane in your home, the windows in your home and your condo were to have blown out and it destroys all of your furniture, your finishings, your wall
carpets,
then it's going to cover those damages, ostensibly.
I also want to make a point about insurance is not just about covering you for a hurricane or a windstorm. It also covers you if someone slips and falls on your property.
A general liability policy.
So it has not only the casualty portion, but it has the general liability. So if you have a worker that comes to your house and he slips and falls on your driveway and he decides to sue you, then you notify your insurance carrier and they protect you. The same with a condominium. The condominium has liability insurance, and then you within your unit have liability insurance. Let's say, for example, you bring a plumber into your condominium, and next thing you know, he bursts a pipe and it destroys 8 units below. You need liability insurance to protect you. Hopefully, you've had enough smarts to have gotten an insurance certificate from the plumber and given it to the condo association, because that's typically something that they require. Just like if you own a piece of commercial property and someone's going to come work on it, you would require them to provide you not only with their license, but a copy of their certificate of insurance. So liability insurance is also important in the context of home ownership, commercial property ownership, and condominium ownership.
And like windstorm insurance has also gotten significantly more expensive over the last few years. We've seen an increase across the board in different policies general liability included. We've also, David, on the condominium side, seen a significant increase in cost of what's generally known as directors and officers insurance, which is the liability, effectively the liability insurance for the governing body of that association.
And that, in large measure, is a result of the tragedy in Surfside with Champlain Towers, where the board of directors were sued for, $1 billion. They ended up paying a portion of that $1 billion settlement. Whether they were or weren't actually at fault for the delays in getting the work done, the insurance carrier did pay out some money. So it was very interesting because officers and directors, or directors and officers insurance, used to be very inexpensive.
I remember you used to be able to get the, you would get a $2 million policy and then be able to get a $200 million umbrella for a few $1,000s a year. I remember when I was first in property management, it was actually one of the easiest policies to get.
Yeah, you'd pay $5,000 for $1 million or $2 million of coverage. And then they would include that in the endorsement of the umbrella. And so that the listeners know, an umbrella is something that sits over the top of all of your insurances, whether it be the liability, whether it be the casualty, whether it be the windstorm, and it sits over the top, and it's an excess policy, if you will. Mm-hmm. Well, what's happened since the Surfside tragedy is they no longer will give you that cheap umbrella for the directors and officers. And so the first $1 million or $2 million of coverage, which used to be $5,000 or $10,000, is now,
50
20, 25 or
50,000 in some big associations.
And then if you want an umbrella of 15 or $5 or $20 million, they want another $150,000. And if you say, I want a $50 or $100 million endorsement for directors and officers because we're in a big high rise and it's a very expensive high rise and they're luxury units, the insurance company will say, no, we're not willing to give it to you.
David, if someone is buying something, let's say as inexpensive as a $500,000 home or, a big commercial property, when do they need to get advice from someone like you based on insurance and what they need to have? When does it rise to that level?
So if someone is buying a home, let's just talk about an individual home, $150,000 to whatever, $20 million. There are a number of items that you need to look at. The first one is, what flood zone are you in? Because you're going to need to know, can you get flood insurance? Okay, depends on what zone you're in. If you're in Miami Beach, you're in,
you're getting flooded.
Right, exactly.
And let me cut right to the chase.
Just
you got a pool whether you bought one or not.
Get out your snorkel.
That's right. Yeah. Hope you can swim.
So get swimming lessons and buy a snorkel. But if you're inland, you may be in a different flood zone. So that's one thing that you can ask when you're buying a home. What flood zone am I in?
And it can be the difference of feet. I mean, again, for my example, I live in the Upper East Side here in Miami. I have a single family home in a community, and our house happens to be just several feet past a flood zone designation. And so I've got neighbors down the street who are in a completely different flood zone than where I'm at, and have a completely different cost, if you will, for their flood insurance. So to David's point, it can be very, specific to exactly where that building is, as opposed to saying it's one neighborhood entirely.
It's definitely, they have a map, and that map shows what flood zone you're in. So that's the first thing, is what flood zone you're in. The second thing you want to ask is, you want to call your insurance agent and you want to find out, can I even get insurance, and what kind of insurance can I get for this property? The reason I say that is, if you have a 20-year-old roof that's leaking, your insurance company may say to you, until you fix that roof, we're not giving you insurance coverage, because they don't want to buy into a problem on day one. So they may want to see a property assessment report on day one to find out what it is they're covering and what is the condition of the property.
And the same can apply to condo associations as well. If a condo association has significant defects in its roof or other areas.
Well, if it hasn't been maintained for 50 years and the roof needs to be replaced for $2 million and they haven't done it for the last 5 years, trust me, they're not going to be giving you insurance coverage that will protect you for, let's just call it, water events, when they already know that the roof is leaking and they have reports that say you've needed to replace your roof for the last 5 years.
It's
so
like trying to get health insurance or life insurance when you've got something, that would preclude you from getting it. It's not a lot different.
It would be like trying to get disability insurance after you're already disabled.
Right.
That's the only way I can describe it.
I had an insurance broker, and Kyle, this is actually impacting us a lot right now because following legislation, to David's point about Surfside, there is now a lot more requirements made to condominium associations in particular for reporting where they are in terms of their maintenance status and that they're properly funded. And I had one insurance broker tell me after that had been passed that when these associations are in a state of disrepair, you're essentially trying to get insurance while your building is on fire. And they're going to say until you put the fire out and restore, you're not getting coverage because it's obvious that you're already dealing with that issue.
And that's a problem because under the law, condominiums are required to be insured. So imagine they've passed laws that now give individual liability to directors if you are reckless or grossly negligent or intentional misconduct. So you have this standard which says if you don't do things that you should be doing and you're reckless in your duties as a director, you're going to have personal liability. And then you go to your insurance agent and they say, we can't get you insurance. My answer is get off the board.
Right.
So when do they need to get? So when do they need to see? When do they need to see a lawyer?
So here's the thing. You're buying a house. You go to your insurance agent and they offer you different types of insurance. You may or may not understand what they're offering you. If you don't understand what they're offering you, ask them, why would I want this policy? Whether it's flood, fire, windstorm, and as I said, the condition of the property. For example, let's say there are fire code violations or you have a notice of violation from the city on your property. You may not get insurance. You need to know that. Don't buy a property with notices of violation and code violations because you may not get insurance. If it's a commercial property or if it's a condominium, there is typically more of a need for a lawyer. And here is why. Single family home, you don't have things like lost income. Okay?
Which means?
Loss of income means you're running a business.
Okay.
You can't create revenue because the business is shut down because there's been a casualty loss. Let's say it's a hotel. Let's say it's a Publix, grocery chain or something like that. Or let's say it's Macy's and there's destruction of property and you can't be open for business. You may have a right to loss of income. At Haber law, we have insurance if we can't practice law because there's been this event and we can't go to the office and we can't conduct business. We would have a insurance event of loss for which we could get money back for not being able to conduct business.
David actually has insurance policies on his shirts because if he can't wear shirts like that,
he's not the same person.
It's not the same person. Right. So it's an appreciable loss.
I not only have that, I have dark shades for people who look at my shirts so that they don't get blinded.
That's a safety protocol. It's smart.
Right.
It's smart.
You have to have safety protocols.
Kyle, I think bridging.
I'm not done answering.
I'm gonna jump in on what you said because I think bridging the gap bridging the gap between what you're asking David and what David's gonna say still is, I think attorneys like any expert, from a layperson perspective, can be as much of a translator as they can be an advocate, because a lot of the terminology used for the layperson in some of these policies can be very confusing. And to David's point, it can also be a question of actual need as opposed to just confusion over whether or not they understand the terms in the contract. And David, please go ahead.
So what I wanted to say is there's two sides to when you need the lawyer. If you have an event of loss, you may need a public adjuster, which is a person who helps you deal with your casualty loss and helps you calculate how much you're entitled to and helps you submit your claim. Or you may need your lawyer to help you. And if, in fact, you've had a denial of the claim, then you definitely need a lawyer, in my opinion.
In that advocacy status.
In the advocacy status. Same with the condominium, same with the commercial property. But on the go-in, meaning on getting the insurance to begin with,
Right.
typically a condominium will talk to its broker, it'll talk to its management company, and it will talk to its lawyer about things like how big an umbrella do we get for the liability, the casualty, what can we get, how much will it cost us, are we protected under the business judgment rule as a condominium board if we only get $50 million of coverage as compared to $100 million. You may recall that in Champlain Towers, they were underinsured. And that's a big issue in insurance if you're underinsured. So the lawyer may tell you something like, what does the last study show for what it costs to replace and rebuild this condominium? And if that study is 10 years old, that's not a good idea because, of course, construction costs change over time. So that's one thing you would talk to your attorney and your management company about, as well as your broker. You might also talk to them about things like the deductible. On a condominium, you might have, they have options. You have a 3% deductible. You have a 5% deductible. Well, on a $100 million condominium loss, 5% is $5 million. That means the owners have to pay that first $5 million versus 3%, which is $3 million. So there are questions about which should we do, or should we just do a single limit, no percentage, just a $1 million deductible, which means that until you have $1 million of damage, the insurance company doesn't pay one penny. So there are things to talk about with the insurance broker as well, and your agent, as well as your property manager, as well as your lawyer, about things like deductible, as well as there are certain things that say the deductible is a per event or per year, meaning you could have a 3% per year. You could have $1 million per hurricane, because what happens if you have 4 hurricanes within 1 year? So there are different ways the insurance carriers rate this to give you different pricing. So those are some of the things that they go through in terms of talking with the attorney, talking with the agent, and talking with the property manager. The other thing that's of note and of interest is, can you get certain credits for having hurricane-proof windows and doors, right, wind mitigation, garage pumps to prevent water from aggregating. There are certain things that they can do. Storm shutters on your house, for example. Many people in South Florida, single-family home, they say to you, well, what mitigating factors do you have? Do you have storm shutters? Do you have hurricane-proof doors and windows? So when you tell State Farm or Geico or Allstate or whoever it is that you're doing business with as a single-family homeowner, they're going to say, do you have these things? And if your answer is yes, they're going to require an engineer to come out and look at your property and confirm that you have, in fact, hurricane-proof doors and windows, or you have storm shutters, so that you can get that discount, if you will, for having a house that's more protected than other people.
Right, and I think the ultimate guide here, Kyle, and for our listeners and viewers is you do want advocacy, you do want expert opinions, and you probably want a few of them, because when it's the combination of knowledge from different areas that often works to the best interest of an individual homeowner or a condominium association. Meaning, your broker's going to give you guidance, your attorney's going to give you guidance, your property management company's going to give you guidance. You may
so's your wife or husband and best friend.
Right. You may even have a consultant. I mean, there's some associations, some buildings, some companies that have risk advisors, that have risk managers, who are not trying to sell them an insurance policy, but who are there to talk to them about what they see in the market and what insurance policies are needed. Maybe they're going to identify some gaps. And we're going to talk to Joe a little bit about some of the utility of those third parties, because
I love that, because the agent is there to sell you insurance and also to try to protect you. But I always like, if you have a business, a big business, whether it's the Aventura Mall, or whether it's a big hotel, or whether it's big condominium, I like the idea of an independent third-party consultant who merely looks at all of your insurances and says, hey, you have a gap. You only have this much boiler and machinery coverage, and your general liability doesn't add on to that, so you need a this or a that or the other policy. Or you have a mold exclusion, or you have this type of fire coverage, but it doesn't cover for X, Y, or Z. So you get an independent analysis by a third-party expert. And that's really important when you're dealing with big, valuable pieces of property. You typically don't get that with a single-family homeowner.
Does this not raise your investment when you're buying to get all of these opinions? Is it any part of it that comes with the course, or is this an additional investment?
Well, I mean, from my perspective, Kyle, the reality is that depending on if you're a single family homeowner or a condominium homeowner or board member, or you're a commercial property owner, there is always utility in verifying with experts, am I covered under the following circumstances? And look, it's a risk proposition. You can pay less and take greater chances, or you can pay more. And obviously you don't get that money back. Does it improve the value of your asset? At face value, it doesn't necessarily. But if you look at it as a function over time, and to David's point about things like deductibles or single limit policies, what you can really do from a
tell him what a single limit policy is, because you just went over his head right there.
So David,
I raised the hand for you.
David had made a point about single limit policies, where basically there's a fixed amount on a given loss or a given period of loss, whether it's one event or any number of events across the course of a finite period of time, I mean, typically a year. As opposed to a deductible, which is on a relative percentage of the value that you're claiming. And then you get into the questions of how much of the property itself is actually insured. Is it the total insurable value, meaning the absolute total of the value of the property? And even within that, is it new? Is it reconstruction? Is it existing construction? Or is it 90% of that value? So there are so many idiosyncrasies to this industry. I think part of the angst, if you will, on behalf of an average consumer is trying to download this, and you're downloading it about at the same speed that a board member would have to.
Yeah.
And then make a multi-million-dollar decision about a potentially multi-hundred-million-dollar asset.
And have to do it within less than a week because you don't get the quote until the last minute.
We're going to talk to our guest about that, about the timing of quotes and I think functionally what an end user should expect as part of this process, because as you can imagine, just hearing what we're talking about, and we're not insurance experts, we've just been on the front line of this for a long time. There are so many potential decisions to make in this process that it's not only easy to get confused, and I won't say this on behalf of the insurance industry, but I think it's easy to get misled, because you will also have quote unquote experts on a board, right? Somebody who's been a board member for 10 years and believes they know everything, doesn't know everything. The insurance industry, like any other industry, is constantly evolving. And in order to keep pace with that, you need to understand it, and then understand all these overlapping policies. And when does GL give out? And I have to worry about
GL is general liability.
Umbrella, my directors and officers policy, does that cover me in the event of the following? And I think we're going to get into that with Joe and to talk about what does that allotment of policies look like, and what's my broker supposed to be telling me?
The other thing I wanted to tell you was, when you're a single family homeowner, or if you're a commercial owner or a condo owner, sometimes you want to switch policies because you can get it cheaper somewhere else. But you run into the issue of, was the event of loss during Allstate's policy year, or was it during State Farm's policy year? And so you'll get into issues of policy coverage by year, especially with directors and officers insurance, especially with regard to liability insurance. So it's not such a great idea necessarily to switch companies.
When is the right time to switch? First of all, better pricing. Is it possible to get better pricing in the same coverage, or we're going
to get into that because that's
okay.
There's this whole other specter in the state of Florida known as agent of record, in terms of who can go out and procure these policies on my condominium's behalf, and there's some real limitations to that. And I think a lot of people also get confused by that, like saying, why didn't my property management company or attorney or whomever they have, risk manager, show up with 5 policies to choose from? We go online for our car insurance, you see these insurance aggregation sites. sides and we can say, well, Geico's going to charge me this and Progressive's going to charge me that and USAA, if I'm qualified, is going to charge me that. You don't necessarily get that same advantage in the property insurance market. And we're going to have our guests talk to us a little bit about why and a little bit about what options really do exist that way.
By the way, in terms of car insurance, it's interesting with the rising tides and the floods that we have, like the one we had last month. I was going to say,
just a few episodes ago, we were coming off those floods in Brickell and all over the city. Yeah.
So imagine if you have a Tesla that's electric and the batteries are on the bottom and your car is now underwater. I wonder whether Teslas are going to be covered.
I think Elon needs to design a submersible Tesla. We're going to forward
just
this
for
on
South Florida.
I was going to say it's going to be called the Tesla Miami.
So what is the, if any, responsibility of the industry to make sure that people like myself understand it? I'm listening to you all talk like the first 5 minutes of this and I'm going, what are they talking about? You know,
it's a great question.
And I think we're doing it right now, Kyle. I mean, I think part of what's been missing and part of the genesis of this very podcast that our listeners and viewers are tuning into right now is the idea that there's not a lot of outside the industry conversation that happens. There's a lot of sort of incestuous conversation and education that takes place, but there's not a lot of conversation outside of it. So to David's point and my point earlier, you're getting this information in a very short period of time. You're a volunteer board member. You're trying to digest it in an hour and make a decision within a week. And you haven't kept pace with the industry, with the market, with all the terminology. Very, very difficult.
I got another one. Most condominium owners, and I'm relating this specifically to condominiums, most condominium owners from other countries don't even know that they need to get a policy separately for themselves for the interior contents of their unit. And I've had many condominiums where an event of loss will occur and the owner will say, I didn't get insurance. They paid cash. They don't have a mortgage. They didn't need insurance for the mortgage, and they didn't know that they needed insurance. Now, obviously, we always recommend that we write to the owners of a condominium. We say, don't forget, storm season's coming. You need to have your own homeowner's HO6 policy to cover the contents of your unit. They also don't know, and I don't know that individual homeowners know this either, if you're renting your house or your condominium, you need a separate type of coverage for a tenant, because now your condominium is not a residence, or your home is not your residence. You are leasing it out, which is a commercial enterprise. It's no longer just you living at home. It's someone else living in your home. And so you should require that they get a renter's policy, and you need to let your own insurance company know that you're renting out the unit, because it's a different type of coverage.
And I'll go one step further. Now, with the advent of both things like Airbnb, VRBO, and certain types of condos that allow for transient occupancy, akin more to a hotel, you also need to advise your insurance policy that you've got transient occupancy. Because if you say, I've got renter's insurance, well, that may cover you in the event that somebody has a leasehold on your property. But in the event somebody's renting it by the night, your policy may not apply. And so we now have, again, this is the modern era of insurance. We may have yet a third tier of coverage that might be required, because you've got essentially more liability with a transient tenant, because you know very little about them. They're in and out. And we know just on a risk analysis basis, the likelihood of somebody who's there for a night or two doesn't care nearly as much about the safekeeping of that property as somebody who's there for a year or somebody who actually owns it.
And it's not even just caring about the unit. They may not, they don't know the unit as well. So if it's dark out and they're turning the corner and they slip and fall because they didn't realize there was a wall there because they haven't lived there, there's a bigger risk. And the insurance companies rate based on risk. Just like, and this is in the fire code, if you're a hotel or a transient community, you have to have higher safety levels, because the people don't know where the fire doors are. They don't know where the stairwells are because they're there for a night or a week. It's not something where they live there full time, and they know that the stairwell is right next to the laundry station.
Thus, the evacuation maps in the back of hotel doors by code.
Right.
For that very reason.
So the pricing is different as well. So, for example, someone doesn't know how to use the stove and they start a fire because they're transient as compared to someone who's lived there their whole life and knows how to start the stove. And so they know not to start a fire because they know what they're doing with their own stove, as compared to someone who's looking around and they're looking around and it's a gas stove and they have the gas on for like 2 minutes and then they, say, forget it, I'm just going to get a match, and they light it with a match and they blow up the kitchen.
It's a cheap way to get a haircut and a facial, though. It's actually very expensive.
I've actually done an eyebrow.
That was actually what you did.
Yeah.
We're gonna take a break right now. We're gonna welcome Joe Knapp from Brown & Brown Insurance, and I think our hope is, Kyle, on behalf of everybody out there listening and watching.
Remember, he's everyman.
For the everyman is what are some of the solutions, and what do you need to know? How do we educate the people who are not in the same position as us sitting in this studio, and what can we do to address what has become an increasing concern of the cost of insurance and the burden it places on all of us? This is Sun, Sand, and Soul. Please make sure to follow us on YouTube, on Apple Podcast, on Spotify, or go to our website, www.sunsandandsoul.com. We'll be back in a few minutes with Joe Knapp from Brown & Brown.